a slide deck, so I'll be walking you through this slide deck. I'll just start with our safe harbor disclaimer. So, as Bibhuti mentioned, this presentation and the discussions may contain certain words or phrases that are forward-looking, based on the current expectations of the management. And the presentation has been prepared only for the purpose of this discussion, and it's not an offer or invitation to buy or sell any securities of the company. Obviously, the document is confidential, and the document being provided is subject to change without notice, and the company does not assume any obligations, right, to update these forward-looking statements. And any statement in this document that's not a statement of historical fact or is a forward-looking statement involves certain risks and uncertainties, right? And I hope everybody will acknowledge that you're solely responsible for your own assessment of the market position, and that you'll conduct your analysis and form your own view, right? So these are the few safe harbor points I want to go through before we start. What will we be going through today? A little bit about the company, the background of the group, our businesses, what are the key growth drivers for our businesses, and what are the financial highlights of Q3, and a little bit of investor information. Right. Just a quick overview of the Trition group. So we basically have three verticals: Trition Valves Limited, which is the listed entity. This is the holding company, and this is the automotive vertical. We have something called Trition Valves Future Tech Private Limited. This is a wholly owned subsidiary. You can consider this to be our kind of backward integration entity. And Trition Valves Climate Tech Private Limited. This is our climate control vertical. So you can think of this as, another component business. This is also vertical integration for the company, right? We also have a Hong Kong entity. I think post-COVID, this entity has been kind of, slowly we are winding it down, right? So at the current moment, there are no active transactions happening from there. We'll discuss this also later on in the call. Little bit about our group. We celebrated our 50 years of our company during 2025. 10th September 1975 is when the company was incorporated. So 10th September 2025 was our 50th anniversary. And we held a nice, I would say, event to commemorate this 50-year journey of our company. From being, let's say, a single product, single entity company, the group is now poised to exceed about 550 crores of sales this year. We may even do better than that. But that's the kind of number that we are confident we'll cross this year. And I would say that, in spite of, many challenges and many regulatory, let's say, changes in the business environment, I think our business has been fairly resilient. And hopefully that shows, the majority of our group and our businesses. Coming to our business, really, just to kind of explain to everybody what are the different elements of each vertical. So if you look at our automotive vertical, we produce tire and tube valves. These are supplied to the tire industry. We also make what are called tubeless valves. These are supplied to the vehicle OEMs, vehicle manufacturers from two-wheeler, four-wheeler, truck and bus, and so on. We also have products we make for the EV industry. These are, battery components. Some of them are patented. So we have some very interesting products for the EV ecosystem as well. We also make valves for the tire pressure monitoring sensors, right? We call it TPMS valves. So these are valves that are, let's say, part of the tire sensor systems, which are now more and more coming into the market. So it's something new. We also make valve cores. Valve core is a child part, what we would call as a child part, which is a subcomponent of the valve. And this has also got a kind of a market on its own in the replacement segment. We also have I would say, aftermarket vertical, what you could call as B2B2C, right? Where our products are distributed right down to the tire shop level, right? So we have that vertical as well. And of course, we also export. If you look at our metals vertical, we produce brass rods, coils, wires. This is our primary product portfolio. And now we are developing some special alloys, hollows, or tubes hollow rods is also something that is a term that is used in the industry for these tubes. So that's also something that we are getting into. In the climate control vertical, we basically make components for the air conditioner industry in India. So by air conditioner, I mean split ACs that go into, let's say, homes, offices, and so on. We also make products for the commercial air conditioning and the commercial refrigeration industry. So the product portfolio is broadly made up of what we call as service valves, charging valves, ball valves, and other such parts and accessories, right? Just a point to note, we spoke about this in the last call as well. The climate control vertical is actually being merged with the holding company, which means that very soon the group will become more efficient, right? From 3, let's say, companies, we will be merging 2. So therefore, we will become 2 manufacturing companies. We will have Trition Valves Limited, which will have 2 divisions, the automotive division and the climate control division, right? The metals vertical will continue to be a subsidiary, wholly owned subsidiary of the holding company, right? Yeah, so this is the post-merger scenario. Trition Valves would be the sole valve and core manufacturing entity for the group. FutureTech will continue to be the vertical or backward integration entity for the group, and we are also selling to external customers. The interdependence of the 2 entities would further increase, right, post merger. So there'll be higher allocation of funds to profitable segments. There'll be higher intercompany purchase of brass rods, of course, at arm's length, and this will be the post-merger scenario. Just a quick update to all our friends who are on the call today. What is driving our business really? What is driving growth for us? So if you look at the automotive vertical, I would say our market leadership and our customer base continues to grow in the tire and tube vertical as well as the vehicle OEM business. New product developments like the EV products and TPMS, which have higher margins. This is also something that is driving our business forward at the moment. Obviously, operational excellence in terms of improving our cost structures, and I would say planning our business around our commodity fluctuations and currency fluctuations. We are trying to ring fence the company from these kind of fluctuations to ensure that we have I would say a steady and consistent kind of a financial performance. In our metals vertical, obviously, our technology is something that is very new. It's cutting edge. It's the latest technology that we're using, horizontal continuous casting. So obviously, very good, I would say, manufacturing technology, and I would say deep level of customer engagement, right? This is what is kind of, bringing new opportunities to the table for us. And those are, opportunities that we are trying to encash as we go forward. In climate control, again, we are the single producer of a lot of these products in India. So import substitution, make in India, these are things that we've actually done in reality, right? These are not just jargons for us. These are things that we've actually gone and done for the company. So today, if you look at the service valve portfolio that we have in the climate control vertical, we are the only Indian company producing those parts at scale. First time it's being made in India. So I would say technology-wise and manufacturing capability-wise, I would say we have a benchmark kind of a setup which can compete with any setup anywhere in the world, right? Whether it's the developed world, China, wherever you go, you will not find a better manufacturing setup for these components than what we have set up. Of course, we have some challenges in this vertical, which we'll talk about later on the call. What are the key growth drivers of our existing businesses? If you look at revenue and margin, obviously we continue to grow business across verticals, but we are focusing on obviously the high profit products, right? We're strengthening our sales. I do believe that some of the new trade deals that India has made with US and EU, those will be further tailwinds for us because those are markets that are very keen to start working with us, and hopefully with the trade deals, it will be a lot easier to trade with these countries. And obviously, we continue to engage with customers for price corrections wherever prices have not been corrected for a long time. The industry has been dragging their feet, in terms of compensating us, non-RM related costs like manpower, consumables, power cost, whatever other increases that have not been compensated for a long time. We are pushing the customers now to get those price corrections through for us. In terms of capital allocation, I would say we need to allocate funds for our new initiative, and we need to ensure that we fund the growth for the metals vertical, for the TPMS product line that we are setting up now for some of our global customers. We need to continue allocating capital to ensure that we keep growing and we keep in step with the market requirements. Coming to synergies, obviously, improving our cross-selling opportunities. There are a lot of cross-selling opportunities that we are encountering in the market. Very, I would say, positive, very optimistic about those. We're also strengthening ties with our, I would say, circular economy kind of mindset, especially in our metals vertical, where, I think circular economy is playing a bigger and bigger role. And I think we're very well positioned to encash those kind of, concepts that are coming into the market. And obviously, we want to continue to optimize our manufacturing ecosystem around our Mysore facilities. Quick financial highlights in terms of what we planned and what we achieved. So I would say Q3, normally we do see a little bit of seasonal dip in sales. Nothing to be really worried about. It's a normal dip that happens because during October to December quarter, there are fewer working days around October, November due to the holidays, Dasera, Deepavali. And also at the year end, a lot of the vehicle OEMs take maintenance shutdown. So typically Q3 is a bit of a slow quarter for us. In spite of that, I think we have tried to keep our bottom line quite stable. In fact, we strengthened it. Obviously, we want to keep increasing the profitability of our metals business, right? That business is slowly maturing now. We started that business 4 years ago. And I would say we've gained a lot of traction in the market. So the focus always was first grow the business, first create the confidence amongst the customer base before we start, focusing on profitability. So a little bit of that profitability focus has started coming through in Q3, and we'll see more of that going into Q4 and Q1. The climate control business currently is loss making. So our goal in Q3 was to, keep that damage under control, make sure that, we keep that loss as small as possible. And I think we've done that fairly effectively given the, market conditions during Q3. And obviously, we wanted to fast track the, merger of Climatech and Triton Valves, which is long pending with NCLT. So we've pushed as quickly as we can to get that through with our legal team. Another thing that, of course, our 50-year special thrust on marketing and communication, I would say. So I think we had a nice, I would say, interaction with a lot of our customers, our suppliers, bankers, consultants. And we were lucky that, some very interesting, high-profile people participated in some of our events. We had the Maharaja of Mysore, who's also the Member of Parliament from the city of Mysore. We had Mr. Nandan Nilekani, he's a legend. I don't need to say anything more about him. Mr. Swapnil Jain, one of the co-founders of Aether Energy. Aether is a very critical customer of ours and a customer that, we are working very closely with, and we have a long future with them. So Swapnil was kind enough to come and attend our 50-year celebration event and share his thoughts about, the industry, about EVs, about what we have done also in our own little way for the EV ecosystem here in India. So yeah, I think we had a nice, I would say, thrust on marketing and communication during Q2 and Q3. Obviously, another point is, February 12th meeting of the board, we formally recommended a 3:1 bonus. And I think that's something that we felt we should reward the shareholders with. And I hope all the shareholders, investors were happy with that decision, because we want to increase the liquidity of the stock. We want to attract more interest into our story, and we felt this is one way that we could do it. So that's about the plan and actuals for Q3. Just a quick overview of the standalone numbers, right? Here what we've tried to do is we've tried to break down our sales into product sales and other operating income, right? So if you look at our standalone numbers, right, other operating income is by and large 95% of it is sale of scrap, right? Now, why is that such a significant number, you may ask? Basically, the products that we produce in the automotive vertical are by and large produced with brass being the main raw material. And when you produce components from brass, you generate brass powder, brass scrap, which is a byproduct of the machining, forging, and other such processes that we perform on the raw material brass that we use. And this material typically is shipped back to the brass mill from where we bought the brass, and it's turned back into the raw material form. It could be a brass rod, it could be a brass coil or a brass wire. And in the process of doing this job work, we are doing something called sale and buyback. So at the moment, because it's sale, this gets added to our revenue, right? It gets added to our revenue number. So typically you can see between Q2 and Q3, right? We had almost about 68 crores, 31 crores in Q2 and 37 crores of scrap sales by and large. 95% of it is scrap sales. And this adds to our top line. So if you look at really the product sale, what we actually sold as product, right? Year on year, we've grown about close to 10%. And you can see sequential quarter, we've dropped a little bit. That's the drop that typically comes during Q3, right? In terms of sales for us. Having said that, if you look at our normalized EBITDA, right? I think we've kept it quite stable, right? Between Q2 and Q3. And you can see that, we've grown a bit from, last year. Here, what we've tried to do is, if you look at the PBT normalized, without considering the exceptional exceptional expense here of 1.43 crores is basically the labor code impact, right? I do believe that, we have a little bit of a cushion here in the provision that we have taken. We have taken a very conservative, I would say, view, as we normally do as a business. We're always conservative. So some of this, perhaps, we will be able to moderate going forward. But we've taken a rather larger exceptional expense than perhaps we would have needed to take. But that's only to ensure that at any point of time, we are not underprovided, right, in terms of the labor code impact. This is something that unfortunately, all companies have had to take because, the gratuity calculations, the leave calculations need to be reset, right from the date of joining of all the employees in the company. So this is something that unfortunately we could not avoid. But that being kept aside, if you really look at the operating performance of the company, I would say year on year also we've done well. And I would say sequential quarter also, we've ensured that we've not dipped down, right? Small, maybe interesting calculation perhaps that you can do from this slide is, if you take our normalized EBITDA of, let's say, about 8 crores, and you look at that 8 crore normalized EBITDA on the product sale, right, of 69 crores, you will find that our operating margin has somewhat improved, right? It's improved on the sequential quarter basis also, and it's improved on the year-on-year number as well, right? So why I'm drawing your attention to that is that the other operating income, like I said, it's just scrap that we generate in the process, gets added both to the top line as well as the expense side. And so I'm just netting that off just to give you a perspective of how the numbers would look if those two, the sales and the expenses are netted off against each other, what the numbers would look like, right? Coming to our sales mix, of course, we are constantly trying to push our sales mix in a direction that is, I would say, a bit accretive for us. And we do believe going into Q4 and Q1 as well, into the next financial year, we would be seeing further improvements on this number, right? Just a YTD number now. This is again standalone. This is not the Concall number. This is standalone TVL. That's Trition Limited. Again, if you look at the normalized EBITDA, right, we are at about 22.5 crores, right, as compared to about 17 crores the previous year. So we've grown, obviously, the number from 17 to 22.5. And we've also grown in terms of margin from about 6.3% to about 7.1%. And we do expect that going forward, we would continue to build on that. And we'll be continuing to push that EBITDA margin higher and higher with each passing quarter, right? Obviously, PBT normalized. I think we have done fairly well. I think we've already crossed last year's full year PBT, right, of about 8.76 crores. So, of course, the base is still small. So, obviously, the numbers are going to look, in terms of percentage growth year on year, it's going to look good and healthy because the base is small. But we do kind of expect to see that these numbers will remain fairly now strong, stable, and will continue to grow in the right direction for us. This is the group console number. This is the quarter alone, third quarter alone. So if you look at our group console, now this number is something that I would draw everybody's attention to, in terms of saying that, look, all the let's say intercompany transactions are here kind of accounted for, all intercompany sales eliminated. So this gives you, I would say, a truer picture, right, of the status of the whole group, all the companies put together, all the verticals put together. So this is something that will give you a much more realistic picture of what happens when you put everything together and you eliminate all intercompany sales, intercompany expenses. So here is the real picture. If you see growth, sequential quarter growth is about 16%. YOY growth is above 25%, right? So I would say this is where perhaps we've shown that our business model is fairly resilient. It's getting stronger. Financially also, we are delivering better, right, compared to last year. And you can see the normalized EBITDA, right? Year on year, we've grown almost like 3.5 crores. So from 6.5% to about 7.5% EBITDA margin. So EBITDA is heading in the right direction for us. Normalized PBT, right? If I remove the exceptional item, which is not part of our operations, obviously, this is the catch up of several years being accounted in a single quarter. So if I remove that effect, right, the normalized PBT year on year, you can see is grown from 1.76 crores, low base. But having said that, we've tripled it, right? So even though the base is low, tripling is still, I would say, a fairly decent performance. Are we as the management team of Trition, are we happy with that number of 5.14? Probably not. I do believe that there is more we could have done in the quarter gone by, and there's more that we can do in the quarters coming up as well, right? But I would say margin wise, I think some of our hard work over the last couple of quarters is now finally showing some kind of visibility coming through in the numbers. And if I look at the YTD numbers also, I think you will see a similar kind of a trend. Obviously, Q3 has been better for us, but if you look at the YTD numbers as well, normalized EBITDA, we are almost about 30 crores, right? Versus about 24 crores during last financial year, right? So hopefully we're headed in the right direction here as well. Another thing I'd like to maybe show all of you, which is not part of the published numbers at the end of Q3. We are only required to present our balance sheet to the outside world twice in a year, but we've shown the balance sheet here to all our investors so to get a flavor of what's going on the balance sheet side as well. So I think we've kept the balance sheet also in fairly healthy condition, right? If you look at, for example, our inventory levels, right? From March 2025, if you look at December 2025, the movement is hardly 2 crores. So hardly, I would say about 2.5, less than 2.5% is the increase in our inventory levels, right? So if you look at it, really, we've grown the business over 20%, right? Over these 9 months compared to the previous year, but inventory is moved up hardly 2%, right? Obviously, receivables have gone up by about 16.5, 17 crores. That's normal, I would say, given the business cycle that we are. It depends on how we also build. So we've built more, I would say, towards November, December, especially in the metals vertical, and therefore the receivables looking a little bit higher than what we would have liked. But again, I would say nothing to be concerned about there. And if you look at the management working capital, also the net working capital, right, we're hardly up about 8 crores, right? Whereas if you really look at the sales has grown quite substantially for having pushed in this additional working capital of about 8 crores. So I would say overall, I would say we've we've performed fairly well on the balance sheet side as well. You can see that, income from operations of about 27.7 crores fully funded the increase in working capital of about 8.2 crores and the non-current item of about 1.8 crores. So operating cash flow is about almost 15 crores positive. Investing flows, obviously, we've put in some capex, which we need to continue doing to keep growing the company. So if you look at it, financial flows about 10 crores, dividend, loan, interest payments, all netted off. Financing cash flows about 3 crores negative, right? But I would say overall, I think we're headed in the right direction. A quick note on the, I would say, bonus proposal, which is now pending for approval by the shareholders, right? This is going to be by e-voting and, postal ballot, what used to be called as postal ballot. So we propose to issue 3 bonus shares of rupees 10, each fully paid up for every share that shareholders are holding. So the current authorized capital is about 50 lakh shares of 10 rupees 10 each, 5 crores. And so we'll be amending, right, the authorized share capital of the company as well in the process of getting the bonus through, right? So the proposal is to increase the authorized capital, and we request all shareholders to approve the proposed bonus of 3:1. The bonus shares obviously will be issued by utilizing the securities premium account. I think we are quite well funded in that sense. And record date and the other particulars will be declared after the general meeting, right? And obviously this is in compliance with the SEBI ICDR rules. And we need to complete the entire process by 11th of April 2026, right? Yeah, so that's a quick, I would say, input from my side. I think we can now move to the Q&A session. So I've spoken for about 30 minutes now. So I think we'll keep the remaining 15 to 30 minutes open for Q&A. So Vibhuti, over to you.
Thank you, Managing Director. So now the floor is open for Q&A session for a span of 15 to 30 minutes. So investors are requested to kindly unmute and show their video and mention their names and organization name and their DP ID as well as client ID before asking questions. You may also write your question in the message box as well. So all the questions raised during the Q&A session will be collated and consolidated replies will be provided at the end by the Managing Director. Investors may also note that the company reserves the right to limit the number of questions based on the time availability. However, investors can ask subject to maximum 2 questions. So this note, I hand over the session to investors. You may ask for questions. You just stop sharing.
Okay.
Sir, may I? Sir, may I ask the question? Because I'm not getting that.
Able to hear?
Hello?
Yeah. Yes, we can hear you, Sudhirji. Yes. Good afternoon.
Good afternoon, sir. And hearty congratulations for very good numbers and also, different product expansion and in the really difficult quarter where commodity prices have gone haywire. So you have put up the good show. So congrats to the entire team of Trition. Sir, I want to understand the new products line. Like in Triton standalone, you are going for the, TPMS and then battery valves, and also in brass vertical, you are also, going for some value-added products. So, and also in air condition, as you mentioned in your opening remarks, that first time in India, some products are manufactured.
Yes.
So, can you outline briefly the new initiative which you have taken, and then how it will bear the fruit in next, coming time, that I want to understand.
Sure. Thank you so much, Sudeep for your kind words and for your encouragement and support to the company. Really appreciate your support. About the new products that you wanted to know, maybe I'll just go vertical wise and explain. If you look at the automotive vertical, I would say that very broadly speaking, the technology in the industry is shifting first from tube type tires to tubeless, right? So that is a transition that is well and truly underway. I would say that over the next maybe 4 or 5 years, that transition will happen almost completely, where tube will almost become insignificant and tubeless will be the product that will rule the market, right? We are very well positioned to kind of keep in step with that technology change. And as I mentioned on the calls before, also our gross margins are slightly better on the tubeless products than they are on the older tube products, right? And also competitiveness wise, we are more competitive in tubeless. I think we dominate the tubeless market much more than we dominate the tube type market, which is the oldest products which are going on from last 40-50 years, where there are smaller competitors who have come in, people who are offering very low quality as well as low price products. So that's a technology change that is happening. That's going to be good for us. It's already underway. The second step of that transition is from tubeless to what is called as TPMS, which means that the new cars that you see being launched in the market, right? These cars have a sensor inside the tire, and that sensor is mounted on a valve. That valve requires complete re-engineering, right? Because it has to carry the sensor weight. In many cases, it acts as the antenna for transmitting the wireless signal. So the functionality of the valve in engineering terms changes quite significantly, right? It's no longer just a valve. It's a valve also. It's an antenna also. It also has to withstand a very, I would say, severe duty cycle, right? So those products are very hard to engineer. Again, I can frankly and objectively say that we're the only company in India that is even capable of developing that kind of a high specification valve, because it's a safety product. Ultimately, even a single valve failing, cracking in the field can become a very severe problem for the industry. Industry is now subject to recall regulations, and it's a safety part, right? So it requires a very specific kind of engineering, and we are lucky that we have the capability to do that, right? So the TPMS products are going to be sold to the TPMS sensor manufacturers. Now, who are the large TPMS sensor manufacturers in the world? There is Bosch out of Germany. There is Continental Automotive, which is now renamed as Aumovio. So Aumovio is also Europe headquartered, very large in TPMS. They supply sensors to all the big global OEMs across the world. And then there is Sensata Technology. Sensata is also a global leader in TPMS technology. We are working with all the three, right? We have already started mass production for Bosch over the last, I would say, 8-9 months. That program is going quite well for us. We will be very shortly starting, we'll be getting our letter of intent from Aumovio possibly in the next few days, literally, right? So we've already done the development. We have technically qualified. We will go into mass production for Continental anywhere in the next, I would say, 6 to 9 months. We will go into mass production for Aumovio as well. And Sensata Technologies, also globally, working on big programs with them. We will possibly go into mass production for them also over the next, I would say, 6 to 9 months, right? These are products which have a higher margin, right? They're more critical, and we will be earning a better margin on these products over a long period of time, right? Because once you get into the supply chain with these kind of brands, unless we screw up something very badly, right, we will be in the system for a very long time. So that's as far as the automotive business is concerned. Coming to the EV side, we are basically making products for battery packs. We have a patented concept for venting battery packs. That's something that we are very stably producing. We have developed a very good reputation. We are defect-free, 100% on-time delivery kind of a product line that we have developed. We are supplying those to TVS Motor, to Ather Energy. We are single supplier, single source for these two. We're also working with a lot of new EV companies, right? We also are very shortly working on new program with Bajaj as well as Honda motorcycle and scooter. We've already developed some components for them as well. And we are trying to expand that portfolio into other components for batteries. There are battery terminals. There are charger pins, right, which go into the charging guns, right, that are used for these vehicles. So we are developing a wide portfolio on the EV space. There's a lot of new opportunities. We've even developed right now a very special product that thermally insulates the battery pack and prevents fire. So there's some other fire prevention components made out of rubber that we are also working on. So there's a lot of, I would say, new stuff that we're doing for the EV ecosystem. We've also received certain RFQs for other brass components, right, which are not valves, they're not battery components, but they're components that are made out of brass, and that a lot of the industry is searching for new suppliers, right? I can't maybe tell you exactly what the product is; it's too early. But there is a lot of work going on, right, in terms of new RFQs that we have received from the industry. Apart from this, if I look at our metals vertical, in the metals vertical, what are the new things we are doing? We are developing special alloys like high tensile brass. We are looking at certain high margin alloys which are used in the hydraulics industry, which are used in the automotive industry, and the products have already been tested, validated. We've already received orders for some of these alloys, and we expect that going into Q4 and Q1, we expect that those orders will only go on increasing for us. That will help us to build that product pyramid in our metals vertical, where we say relatively lower value added products but high volumes, and on the pyramid that I'm talking about is higher value added products, potentially lower volumes, high margins in the vertical. In the climate, I would say we are a bit unlucky, right, because we've done a lot of product development. We've put up a world-class factory for these components. But right now, a lot of our Chinese competitors are dumping, these products into India at abnormally low prices. We are continuously taking up representations with Government of India to stop this unfair trade practice of dumping goods into India and preventing the local ecosystem from growing, right? So that's the only reason why we're not as yet able to scale up the numbers in the climate control vertical. To be very frank with all of you, we have received technical approvals from Voltas, from Daikin, from LG, from Samsung, Panasonic, Fujitsu O-General, Mitsubishi, Havells. You name the large brand in India, Carrier Media, even Haier has approved our products recently. So technical approvals are all in place, right? But because dumping is happening, customers are giving only small orders to us. They're not giving us the full requirement that they actually have. And we are intensely following up with Government of India to correct this unfair practice that is happening right now. If and when that comes through, right, we will see a complete transformation in the climate control vertical. Because, like I said, we're literally the only company approved to make those products. Again, very critical products, high pressure, components, and we are developing more. Right, we have developed parts like distributors. Now we are making other components, ball valves, other kinds of access valves, and there's a lot of other developments going on in the HVAC vertical. Right. So if I look at the next, let's say 3 to 5 years, right, all these product developments will come to fruition. They will start bearing fruit. Some will start from, I would say, last quarter of this year, this calendar year. Some will start next financial year, and some obviously will start in 2028 calendar year. But cumulatively, these will all add significantly both to our top line as well as bottom line.
Thank you, sir, for answering in detail, and all the best for your journey from transforming the company from auto ancillary to kind of technology company. So all the best for that.
Thank you.
And thanks for the opportunity. Yeah.
Thank you. Thank you, Sudhir. Thank you.
Yeah, Ms. Dolly Chaudhary, please ask a question. Dolly Chaudhary. Yes.
Hi sir, thank you for the opportunity and thank you for such a detailed explanation of the opportunities we have. I just had a follow up on the last question only. So, like, I wanted if we could quantify the opportunity that we were just talking about specifically in, like, first of all, TPMS. Like, we've been working with such a big players in the industry. So, specifically for Bosch, like, how it has scaled for us in last 2-3 quarters. I don't know if you can present the revenue numbers, what we have been doing for Bosch, maybe in volume terms, or maybe some number if you can put how it has scaled in last 1 year for Bosch, and how big is the opportunity for Continental and Sensata, specifically for TPMs.
Yeah. So Ms. Dolly, in terms of, let's say, specific numbers for each customer, I won't like to comment on that because, that's competitive information. I would not like to put that in the public domain as to, who is buying what and, what quantity. But I'll tell you the size of the opportunity, right? The opportunity pie that we are on to, if I put Bosch plus Conti plus Sensata together, this could be an opportunity of about 100 to 150 crores a year, right? For the next, I would say, 5 years at least, right? From the time that we start the program till the time the program kind of changes. So, what happens every 4 or 5 years, the component design sometimes changes or, some further, modifications happen. But the products that we are currently working on, if I take at peak, these are going to be about, let's say, 150 crores a year, all put together. So if I take a 5-year picture, right, I would say that the order book would be in the order of magnitude of 500 crore plus, right, over a 5-year period. These are all 5-year programs, right? So
can we have cracked one customer as of now, Bosch?
No, I don't want to comment specifically. Bosch is going to be this much, Sensata is going to be this much, Aumovio is going to be this much, because that's competitive information, right? I'm not telling you to protect the company, right? Don't take me otherwise. I can tell you in aggregate because see, ultimately, this is competitive information, right? We should not be telling customer specific, data. We will be putting ourselves at risk if I were to reveal those kind of numbers. But I can tell you the opportunity size. It really doesn't matter, right, to the investor community whether we are selling to A customer or B customer. As long as those sales are happening and they're happening profitably for us, it should not matter.
Like there
right? I
must
hope
be
you
other
understand.
players also for that, like 150 crore market, right?
No, I'm saying our
Just
opportunity.
for right. Okay.
I'm
And
saying
like
we will make
similar
150. The opportunity pie might be even bigger. Right?
and like similar data for EV battery packs.
EV battery packs, see, I'll put it like this. I'll tell you a simple way. I'll give you a calculator. Okay. So they say, right, rather than giving fish, you teach somebody how to fish, right? So I'll teach you how to fish this number out, right? What you do is you look at the number of two-wheelers, EV two-wheelers that are being produced in the country or being sold, right? That number you multiply by about 1.75, right? That will be the number of, let's say, pressure vents required by the market. Okay. So let's assume that in 2030, right, India is going to produce, I don't know if you have a number. I'll just tell you a number that I have in mind. Again, please don't quote me on this. This is just a public domain, maybe Google Chat GPT kind of a number, right? This could be somewhere in the range of, I would say, about 60 lakh electric scooters and motorcycles will be sold in India in 2030, according to me.
Okay.
All right. So 60 multiplied by 1.75, right? For let's say ease of calculation, multiply by 2. So 1.2 crores, right, of let's say pressure relief valves or vents will be the market requirement. If we get, let's say, right now our market share is very, very high, but let's assume that in 2030 our market share will be 60 or 65%, not the above 90% that we are at today. You can work out the mathematics, and that would be the opportunity size for us.
And just a follow-up on this. If we can answer, like Aether Energy has been growing very well. So, are they sourcing these pressure relief valves just from us?
Yes. There is
We are the
no
only supplier for
Aether
this
scooter on the road today without our pressure relief valve. I can tell you that with a lot of confidence, right? You can check out our LinkedIn handle. There was a comment made by Swapnil Jain, the founder of Aether himself has said it. So I think you can take that as an absolute truth. There is not a single Aether vehicle on the road today without a Trition pressure relief valve in the battery pack.
What would be the average price of these pressure relief valves?
So it depends. It depends on the size of the component. So these are customized components made for each customer depending on the size of the battery pack, the battery chemistry, the venting rate required, the safety features required, and so on and so forth. The kind of packaging requirements, all this has to be considered while doing the design. These vents are sold at anywhere between, I would say, about 100 to, I would say, 180 rupees a piece.
Just a last question regarding the climate tech division. So, as everyone have been waiting for the mandate with the government, so I just wanted to understand, is there a specific reason, generally the mandate gets delayed because maybe in India the capabilities are not there for that product specifically, but as we know that in India we have these capabilities, right? And it's getting dumped from China. What can be the reason of the mandate not coming anytime soon? We have been tracking.
No. Yeah, let me explain to you. Look, I won't use the word mandate. It's not a mandate. See, what is basically happening is that we have become a little bit, I would say, unfortunately, in the eyes of government, we have become a little bit of victims of our own success. See, when I made multiple representations to Government of India saying that dumping is happening and you need to stop it, and this product is available in India, we've developed it. Here is the proof that all the customers have accepted our part. Here is the proof that we've already sold these many parts into the market. We've sold millions of service valves already in the market over the last 3-4 years. The way government works, unfortunately, they're like, look, if we bring in a quality control order, right, you will be more or less the only beneficiary of it, right? Because right now you are the only manufacturer of this part. So my reply to government has been that it's not my job to bring my own competitor to the table, right? That's not my job. Government said, make in India, PLI scheme, everybody come on, start developing components here, stop imports. We did it. Now slowly government is saying, boss, you're the only one. So I say to them, well, how is it my fault? How is it my fault that I'm the only one? Right? It's not my mistake. Right? So somewhere, I think in the government scheme of things, they need to see that justice is done to everybody equally and that they don't want to favor only one company. So fair enough, jokes apart, I do understand their contention as well. So I've been trying to tell them, you find some other way to kind of level the playing field for everybody. Right? Don't punish me for being the first guy to do it, being the first person to bring this technology to India. Don't punish me for it. Right? You find some other way which is fair, to the ecosystem in India, to other players, create a level playing field. Whatever you need to do, you do that. I'm not coming in your way. Right? But unfair dumping, you need to stop. So somewhere I think this discussion is taking a little bit of time. I mean, they're trying to figure out how to do it in an equitable manner and how to do it in a manner that they are not seen to be favoring only Triton. I think that seems to be a little bit of an obstacle for them. We'll find a way through it, right? But it's taking a little bit of time. That's the only problem.
Okay, sir. Thank you for that. All the best.
Yeah, sure. Can we move to the next question, please? Mr. Chirag Shah?
Yeah, Mr. Chirag, sir.
Yeah. Yeah, Mr. Vinod Ori, you'll be next after Mr. Shah. I think he raised his hand first. If you don't mind, we'll go to Mr. Chirag Shah first. Yes.
Yeah, thank you for the opportunity. Aditya, just two questions. One, in the past, you have been referring to expected pass-throughs from the OEMs, the long pending pass-throughs. So Q3 and Q4 where you are expecting some reasonable amounts. Has anything flowed in the quarter?
Yes. A little bit has flown in. In the sense, see, we've been asking, different customers depending on what product we are selling them, what's the product mix for them. We've been asking them a certain figure. It could be anywhere between 4 to 8% in terms of the correction that they need to make on the pricing, right? Some have given us partially. Some have said we'll give you something in this quarter, we'll give the rest in the next quarter. So, the discussions with various customers at I would say different stages, right? But I would say we are very, cautiously optimistic that the industry would understand what is really the requirement, what is the problem. And I'm sure that most of them are very old customers. We know them closely, they know us closely. I think, better sense will prevail eventually, and they will understand that, they can't be unfair to the supplier. They can't be unfair to, the supply chain. So it's how we represent our case to the customer, how we communicate it, how we, take their kind of consent and get it done in a manner that should not damage our business in the long run also. At the same time, they should understand whatever extra they are paying, it is justified. We are not asking something which is unjustified. We're always asking, with logic, with data. We've been, pursuing them. So I do expect that further traction you will see going forward into Q4 and Q1. You'll see further traction coming through. It takes a bit of time, right? Something that's long pending, the amounts start looking bigger and bigger, and then people sometimes hesitate to take a quick decision. So they also need to consult internally with their bosses, with their team members, and then they take a call. It will come through. We are optimistic.
At least for the newer supplies that you make,
yes,
has the price revision accepted or not?
Yes.
Suppose
Any new
supply you make from 1st April, for example.
Yes. So we typically inform our customers about 15 days before the new quarter starts. So for example, April 1st pricing will be intimated to a lot of customers by between 15th and 30th of 15th and 20th of March. They will be informed that, look, next quarter this will be my price, right? Okay. For the quarter ahead. So we do a lot of planning, and if you see how we have protected our bottom line through Q3, it's only happened through good planning, good, I would say, execution of plan. And that's how Q3, like I think Sudhirji mentioned, it was a very challenging quarter actually. Today our numbers are looking fairly decent. So the pain of that quarter is not visible to everybody, but copper went shooting up, dollar went shooting up, all kinds of unexpected things happened, and it was a tough quarter to keep the bottom line stable in that kind of a quarter. See, normally what happens, we take a hit in one quarter and then pass on the hit to the customer in the next quarter. So usually when there is a sudden spurt either in dollar or in commodity price, we initially take a hit and then recover in the next quarter. This time what you would have seen is that we've kind of not taken a serious hit.
Yeah.
Right. So that shows that some planning, some execution has gone positively for us.
Congrats for that. So Q1 onwards, can we see around 100 to 150 pips improvement in margins? Because you have indicated a much bigger impact on margins because of because past hikes not coming through.
Yeah. So again, see, Chiragji, I don't want to put a very fixed number on it, right? I said directionally that we are aiming to cross 10% on the EBITDA number, right? Somewhere between, somewhere around Q4 and perhaps going into Q1. We're confident that we're headed in the right direction, right? There might be a little bit here and there. We may, we may a few days here and there we may go plus or minus in terms of timelines. But in terms of our intent, it's very clear. All the data has been shared with the customers. We have, explained to them. And I think most of them are actually sympathetic to us. But having said that, like I said, right, when there's a big change in the pricing, they all, they have to think a lot, because, once that price change is effected, it's for all time to come, right? Because that is something that is never going to be reversed. Then commodity indexation up and down will continue. But the base revision, whatever we're asking, it could be 5%, it could be 8%, 10%, whatever we're asking to various customers, that base correction will remain for all time to come. So therefore, they have their own, I would say, reservations about it. They want to discuss, they want to calculate, they want to, understand properly before they agree to it. So that's all that is happening today. I think by and large, industry is being, supportive, understanding, sympathetic, but signing on the dotted line, sometimes they just want to delay because, it's a big number.
And last question. So in the past, you indicated you were trying to work with HAL, Hindustan Aeronautics, on the defense side.
Yes.
Anything you like to update on that? These are long gestation projects. So
long gestation project, but I would say, discussions are moving in a very positive direction. And I think, it's just, like I said, it's just a matter of time. See, sometimes their priorities change. I think after that, military action between India and Pakistan, a little bit of their priorities have changed, right? They are now focusing on, ramping up the production of aircraft and, making,
modifications,
vendor changes. They're a little bit, on the back burner, but it will happen.
Fair. No, thanks for this. We understand that. It's part and parcel.
Thank you. Thanks for your understanding. Thank you.
Yeah, Mr. Vinod, you may ask your question.
Yeah, hi, Aditya. Thank you for letting me speak, actually. I have 3 or 4 questions, basically.
Sure.
Here in the beginning, on the beginning presentation, you mentioned that you're talking around 550 crores estimated turnover. Can you have a breakup of this vertical-wise, actually?
Vertical-wise, I would say that we would be doing... I'll tell you. This would be roughly, I would say, 55% standalone, 45% from subsidiaries.
And then breaking the subsidiaries further, how much from metals and how much from other subsidiary?
Metals and climate control, that would be, I would say, about 80% from metals, 20% from climate control. It would be 80-20.
Out of the 45%. Out of the 45%.
Yes.
Yes. Now, can we have a picture from you about the company's next 3 to 5 year scenario, like where the company is heading for and what are your plans? Or in other words, I could put it that is this 550, when can 550 become 1,000? Any plans about it?
I'm tempted to crack a joke here, but I'll try to.
I don't mind. I enjoy jokes a lot.
Very serious. I'll try to stay very serious.
No,
yeah. See, I'll put it like this. Even though we've said 550, I think we would love to have that number as close to
600
as 600 this year itself.
That's what I feel like. Even I feel that.
Yeah. I would say that this figure is actually touching that 1,000 crore number. We've debated this very intensively internally in the company, right?
Yeah.
So I'll tell you how we typically think.
Yeah.
So if you look at our 4-5 years CAGR over the last 4-5 years, we are growing at a CAGR of, let's say, 18%, right?
Yeah.
If I take my 3-year CAGR, it's around 18%.
Yeah.
So we make scenarios, okay, if I continue growing at 18%, which year will I cross 1,000? Okay. Now, if I try to raise my CAGR from 18 to, let us say, 25%, how quickly?
Are you planning for that?
Yeah, obviously we would like to go as fast as we can.
Sure.
Right? But I think what is also important for us to keep in mind is that given the complexity of the business environment these days.
Yeah.
See, now 2 trade deals have happened through January, so people are feeling a little bit, breathing easy now. Yeah. But I would say that we had our heart in our mouth for the last 6 months because we really didn't know where is this US market headed, where is Europe headed, whether anything good will come our way or not, or barriers will keep going up and complicate the situation for us. We didn't know, right? So there are a lot of complexities and uncertainties in the world today, more than what it was even 2-3 years ago. So while we want to drive fast, I think it's also important that the learning from this quarter is that you can see, right, in this quarter, to be honest with you, we actually didn't go very fast. If you see our standalone numbers, we've hardly grown 8-9% or maybe 10% over last year. We could have grown faster also.
Yeah.
But we also calculate these days. See, for example, I knew that a lot of our price corrections are going to happen from 1st January.
Yeah.
Okay. I have a lot of orders. Actually, we could have executed more orders in December. So if you look at our product sale of 69 crore, we could have easily built that number to 71 crores at least.
Yeah.
Right? But we consciously decided if we just wait 2 weeks, like let's say mid-December, we decided that if we wait 2 weeks, we can bill the same goods to the customer on the revised price of 1st January, which is going to be much higher than the December price.
Yeah.
Right? So we
Yeah.
actually slowed things down a little bit.
Okay.
Right?
Yeah.
So imagine my cost of a certain product is 10 rupees. I invoice this product on 20th of December, right? I get 12 rupees. The same product, instead of invoicing 20th of December, I invoice on 1st January, I get extra 1 or 2 rupees.
Yeah.
Why would I do it in December? I don't mind holding inventory. I'll sell it, 15, 20 days later at a better price.
Sure.
So with all this baked in, this is the performance that you saw in Q3.
Yeah.
Okay. Why I'm giving you this example is to say that while we want to go fast, we also need to protect our bottom line.
Yeah.
Now, in the commodity business, a very quick scale up is also going to expose us to high commodity risk.
That's what, that's very true.
Yeah. So we are now weighing out, 18%, we've gotten used to growing at 18 to 20%. If I see group console Q3 standalone, or not standalone, Q3 console, if I look, year on year, we've grown 25%.
Yeah.
So it's
25.6 to be exact, actually.
Right? 25.6. So that 25%, in a way for us, right? That's one kind of a test quarter for us.
Yeah.
If I have to drive the company up 25% in a single quarter, what does it take? What kind of funding do I need to put in?
That's
what kind of credit controls I need to put in so that I don't overexpose to market?
Sure.
What kind of commodity, let's say, controls I need to put in so that I don't get exposed while I'm growing, right? So this experiment so far, Q3, as you can see in the numbers, has worked out reasonably well for us.
Sure.
So Q4 and maybe going into Q1, we will attempt to now raise up the growth rate from around 18% to around 20-25%. We'll try to push it up.
Sure.
We'll see how how we kind of tolerate that kind of growth level, right?
I got your point, actually.
Yeah, and if that works out reasonably well for us, right, we will try to amp the growth up from an average of 18-19% to about 24-25%.
Yeah.
Right. So if we continue growing at 25%,
I got my answer.
We'll get to 1,000 crore faster than 18%.
Yeah. You just mentioned about the volatility in the raw material prices going down in the last, say, 6 months or so.
Yeah.
Right. Have you booked any inventory losses or gains in your first 9 months?
So far, no. So far, no significant hits or I would say gains per se.
Okay.
See, what happens is, like you take dollar, for example, there are certain, imports that we have, rubber products, chemicals, certain things that we still import. When we placed the import order, dollar was maybe 85.5, 86, right? When those bills fell due for payment, they got executed at maybe 91, 92.
But you must have hedged them now.
Some bills we hedge, some bills we don't.
Oh, gotcha.
It depends. Yeah, we would have done a buyer's credit. If anything that's on buyer's credit, we hedge. Sometimes we don't because it's uncertain.
Okay.
Right? So it's like this. Today, if I go to a bank and say I've got a bill falling due first week of April, what's the forward premium? Right?
Yeah.
Today, somebody might tell me, okay, you'll have to pay 93 rupees.
Yeah.
Today, I feel, okay, dollar is still at 90.6. Why should I pay 93? So I'll say I'll wait.
Yeah.
I'll not hedge right now. I'll observe. I'll wait for another couple of weeks and see what's the forward premium, what's the scenario of dollar looking like, and then we'll take a call. So it depends. Bill to bill, we kind of our finance team, they review it, they discuss with me, they kind of we make scenarios and then we take a call. Okay, what we want to do.
Sure.
So, but these are kind of existential risks that we have, and including all these hits that we've already taken. So on the currency, we have taken a hit. Right. So the number that you
Can
see.
you quantify the value there, please, if you don't mind?
I don't want to put a number on it, just for the sake of saying an answer. I don't want to do that. Sure. But I can tell you that, let me put it this way. When I said that in the beginning of the call that we've done reasonably okay, but we could have done better. Okay. These are the kind of areas where we've lost during Q3. We could have done better if dollar had remained in the band of, let's say, even 88. 5 also. Our numbers would have been better than what you saw right now in Q3.
Yeah.
We would have seen something better. Had copper been more stable, we would have seen an even better number.
Yeah.
Right. So those are things that,
I understand that.
There's no end to improvement. See, it's like you watch the stock market, you bought a stock, it went up somewhere. You always think, okay, I gained so much, but what was my opportunity cost? I might have sold too early. The stock might have moved up more. It's a similar case with copper and I would say dollar.
Right? I have
no matter how much you save or you earn, you always feel I could have done better.
I have 2 or 3 more questions actually, and basically 2 questions and 1 suggestion actually.
Sure.
There's other operating income which you're showing separately. Why don't you net it off against raw material cost?
Yes, I think it's a great question. I think I've dealt a bit on this subject in the last call. We are in the process. So this is a process, Vinodji. How it works is we need to take the consent of our stat auditor to make sure that any changes we make are compliant with the accounting standards. Then we will need to provide appropriate disclosures and notes on accounts to the shareholders, because what will happen if I net it off, our standalone numbers will come down.
It's a one-time hit you take, basically.
Yes.
But indirectly, your margins will be looking very healthier.
Margins will look healthier.
Yes.
On a lighter,
the denominator changes a lot.
Yes. Very true.
I think I suggest that way you must set it off.
Yes, and Concall will remain same. There will be no change on Concall. Right? If you were to net off. But thank you for the suggestion. To be very frank with you, we have already started considering the suggestion. And the consultation is already on between stat auditor, audit committee. There are a lot of people who are seized of this matter right now. And very soon we will come out with the right answer for this.
You have rightly attacked the liquidity, low liquidity in the stock, basically stock prices movement actually, by giving a liberal bonus of 3 shares for 1 share. One suggestion would have been that you could have gone ahead with a stock split also actually. So making face value of 10, make it 5 or 2 or 1. It would have improved the liquidity more faster for you. So
Vinodji, we have a philosophy, when you give somebody 2 sweets at the same time,
that's slow poisoning.
They count it as one time I've eaten sweet.
Okay, so you have plans to have a stock split going forward. 2
times separately, then they feel I've eaten sweet 2 times.
So you have plans to have a stock split going forward actually.
You're putting words in my mouth. I was just talking about sweets.
One last request. Can I have a 1-to-1 meeting with you? And I don't mind coming on my own expense and seeing your facilities actually.
Subject to whatever compliance.
SEBI approval. I have no problem with that.
SEBI, LODR, I don't know who are the other all the powers that be. We have to inform and whatever take.
I have no problem. We can get that.
We're open. We're open. Every once in a while we do get requests. People want to come and visit. They want to meet. Absolutely, I'm open, but obviously subject to whatever compliance requirements that we need to follow.
I'll put in a request to the company secretary on this issue.
Sure.
Whenever it's due. Anyway, thank you so much for answering my questions. And I hope you do very well in the future actually.
Thank you. Thank you so much. Thank you for your questions. Thank you for your time. Thank you.
So we are running ahead of the time.
Okay.
We'll take
one more
question from Mr.
Darshan Chandra. Yeah, please.
Sure. Yeah, Mr. Darshan, you may ask your question. Mr. Darshan.
Mr. Darshan Chandra, please. Can we move on to Mr. Munjal Shah? Mr. Munjal Shah, please. Mr. Munjal Shah, you can please ask your question, sir. You're on mute, sir. You're on mute. We can't hear you. May we request you to unmute, please?
Yeah, you can ask your question.
Am I audible now?
Yes.
Yeah, thank you so much. Thank you so much for the opportunity, and really appreciate with the way you are addressing all the questions. And congratulations to the management for the great numbers in this quarter. 2 quick questions. I think we were working on some HVAC valves for the Linux, the company in US.
Yes.
So if we can have some status on it, it would be really helpful. And second, I just put my second question so it will be more easy. Second, regarding to our future tech company. So basically, we know that copper and zinc together makes a brass. So how are we planning to tackle the raw material volatility? Because we have been reading in the news that copper would be the next gold and all those things. So how, as a company, we are planning to work on it? Because I think future tech would be a much bigger division going forward, considering the volumes actually. And are we working on that division to push along with automotive into defense also, or right now it's all on the drawing page? So yeah, these are my 2 questions. Thank you.
Yeah, great. No, thank you for your questions. As far as Lennox is concerned, look, again, like I said, I don't like to normally comment on any, specific customer as such. But just let's say a general point about, the US customers, there was some hesitation from some of our, not all of them, some of them kept the orders very stable. But some of our US customers, over the last maybe 6 to 8 months, they've been a bit hesitant, because of the, I would say, uncertain tariff situation. They've been hesitant to place large orders, they've been kind of dragging their feet a little bit. But I think now that the tariff scenario with India has become more clear, I do believe that, we will see a lot of traction in the US market, be it Lennox or any other customer. We do see that, the order positions, the orders already going up, right? Today, even the tie valve customers that we have in the US, some of the other customers that we have, I can see a lot of, positive developments. A lot of people have come and met us. A lot of people have shown a lot of interest. So I do believe that that is going to help us. The fact that, at least there is some clarity now. What is going to be the tariff on Indian products? Point number one. Point number two, I think your question was with future tech, copper, and,
Right.
how do we tackle volatility? Yeah, I would say, every company has their own way of doing it. But see, by and large, what we try to do is whenever the commodity situation is favorable to us, how do we take advantage of it? When it is unfavorable, how do we insulate the company from any hit? So the strategy thinking is more along the lines of whatever the situation, whether copper is going to go up or down, how do I ensure that I don't take a hit and at the same time I maximize my opportunity? That is the thought process, right? How does that thought process translate into actions down the line? It depends on the situation. Okay, what's the inventory we are holding? What's the order book that we are holding? What's the natural hedge we can create between the two group companies, right? Where I buy, let's say, copper and zinc in Future Tech, convert into brass rod, sell it to Trition for producing components, right? So that I'm hedging, I'm creating an internal hedging kind of between the two entities. So there's a lot of that. I would say that it's dynamic. We keep tweaking, we keep looking at what is going to work better for us. We keep trying to improve our ability to overcome, let us say, volatility, and at the same time encash any opportunities that come our way, right? That's the broad philosophy, right? The third part of your question was about
defense. I'll just add here. So basically, as you said that initially when there is a sudden spurt in the raw material prices, we take hit initially and then we speak to the customer and then we pass on the price on the increase. So should we consider that there such price pass on takes a quarter or it takes much more time than that?
Normally 1 quarter. Normally one quarter.
Because so there is But normally we have like all the customers have accepted such pass-throughs basically.
Yes.
Yeah, I think now we don't face any issue, right?
No, I would say, see, the period of 2022, 2023 were very bad for us because, the industry was still not in that rhythm of every quarter price change.
Right.
And that was a time when, copper had huge fluctuations. Those were the years where, it went up very high, then it came down also very fast. So it really threw everybody off balance. So again, I should humbly say that whatever we have learned in terms of, managing the commodity, let's say, fluctuation, it's not that we have never burnt our fingers. It's not that we've never screwed up. We've made many screw ups. We've burnt our fingers many times, and we've learned the hard way how to kind of handle the situation, right? So I would say that it's a continuous learning because each time volatility hits you, the situation could be different. See, it depends on what's my order position, what is my planning, what's my working capital, what's my supplier situation. There are complexities which are perhaps not easy for me to explain to you on this call. There are times when, for example, let's say commodity price drops. Suddenly the suppliers, right, they refuse to sell sometimes. Right? Let's say copper today was 10,000, tomorrow becomes 9,000. Right? So I say to my supplier, hey, copper has dropped. No, now you give me at 9,000. They'll say, no, I'm not giving. Why should I lose? I've already bought this material at a higher price. I don't want to encash. I'll wait.
Right.
So, there are complexities which, you can't just map it on a graph.
No, I understand. Yes.
Ground level complexities where, the traders in the field where we are buying copper scrap, they also play their own games to protect their bottom lines. Right. So there are a lot of complexities. So I would only say that dealing with these complexities over many years, I think we've learned, like I said, the hard way. We've burnt and learned. I'll put it that way. Okay.
Yeah.
So hopefully, but we have matured. We've learned from our mistakes, and we're trying not to repeat the mistakes that we made in the past. Right. That's how we're looking at it. Your last point of your question was, regarding the defense opportunity. I can tell you very confidently, the brass that we produce in our brass mill is already going into defense applications, both in India and overseas. Right. I think on the last call, I was talking about a customer in UAE, one of the defense contractors who has started working with us. We do expect that we will be, deepening our presence in the defense sector in the raw material side in terms of our brass also. Right. That's also going on. We've already, started that journey, and we think that over the next, few quarters, that will get deeper and stronger, right? Both in India and overseas.
Okay.
Yep.
Yeah. Thank you for answering the questions patiently, and I soon wish to connect one-on-one. We'll get in touch basis the compliance and everything. And thank you so much. Thank you.
Thank you. One more last question before we close. Anybody? I thought somebody else wanted to ask me. Mr. Darshan. Yeah, Mr. Darshan, are you there? Would you like to ask your question now? No? Okay.
Message box.
Question in the message box. Okay. Panel is not opening. What is it?
You asked what will be the overall capex needed over the next 3 years for the new products, and what is your current capacity inflation you can quantify?
So capex over the next 3 years, I'll put it like this. In the metals vertical, there will be no significant capex over the next 3 years for the brass mill. In the automotive vertical, we expect that the average capex per year would be somewhere in the range of 5 to 8 crores, right? That would be the kind of capex that we'll be looking at each year. What's the current capacity utilization? In our brass mill, our current capacity utilization about 65%. It will come down to 50% once the second line starts, because our capacity will get enhanced. And in the tire valve vertical, I would say we are somewhere in the range of, 70-75% capacity utilization as of today. Right. I think Mr. Darshan Chandra is back. Yes,
Mr. Darshan, please ask your questions quickly, because we already ahead of your time.
Thanks for giving the opportunity. I am audible now?
Yes, very much.
Sir, just I want to know how much is difference in the pricing between the Chinese valves and our valves?
Unfortunately, when we started the climate control vertical, the difference used to be about 5 to 6%. Today, currently, as we speak, I think the Chinese are dumping material at 20 to 25% discount to our price.
Okay, that's why they are buying our products. And sir, can we suggest the government to put some anti-dumping duty for 1 year or 2 years, then go for quality control order?
Absolutely. So thank you. I think it's a very right question you asked. This is precisely what we are kind of requesting Government of India. We are requesting them either you bring a minimum import price, MIP. You might have seen recently, they've implemented MIP on apples, because with the US trade deal, there is some fear that, US apples will be dumped in India. So they fixed what they call as a minimum import price. Apples cannot come, I think, below some 80 rupees or something like that. So we have also requested Government of India to consider either a minimum import price, anti-dumping duty, whatever is that we call it trade remediation, right? Yes. So we've told government, we are not policy experts. You guys as government, you are the experts in policy, whether it is MIP, whether it is anti-dumping, whether it is QCO, you people decide whatever is the right means of remediating trade in a manner that creates a level playing field and that is compliant with WTO regulations or whatever you need to do, you please do it, because the rate at which you guys are, allowing indiscriminate dumping. I'll just give you a very interesting number, right? It's a very interesting number. We actually dug out the data of how much just service valve. We took just one product, right? We have a product portfolio of service valve, charging valve, ball valve, so many products. We just said we'll take one product, service valve. We realized that India imported in the last financial year more than 500 crores worth of service valves, where our sales was hardly maybe 25-30 crores, right? The country imported 500 crores. So if trade is remediated, if a level playing field is prepared for a company like us, the opportunity pie just in one product of Climatech is 500 crores. That's the opportunity pie.
Yeah, so it has in the steel industry also, they put some anti-dumping duty for 1 year and they increase to 3 years.
Yes.
And then they go for quality control order that will last for maybe 5 years or 10 years. It will be very easy to put that dumping order easily after 1 or 2 months.
Absolutely.
And
so this is what, to be very honest with you, this is what we've been pushing government of India to do.
Yeah. And second answer you have given means has we are looking to means for 26, 27 or 27, 28, minimum 25% growth will be there in the revenue.
See, I just give you an example of saying that in Q3 we grew 25%, right? Obviously, we'll try our best to sustain that kind of growth. But let me put a rider here. If we believe that by growing too fast, we are exposing ourselves to high commodity risks, and we are rocking the boat, then we will slow down.
Okay, but minimum it will be in the range of 20 to 25%. Lower side will be 20 and upper side will be 25 or more than that.
I'll put it like this: if you take our 3-year CAGR number, right?
Yeah.
We don't want to fall below that.
Right.
That number is about 18%. Right. So we don't want to grow slower than 18%. We obviously want to grow faster. We want to be in the 20s, right? But having said that, we want to do it carefully in a manner that doesn't, like I said, expose us to unnecessary risk in the hurry to grow. Because see, growth will come, right? We are not, to tell you very frankly, we are not scared about growth, right? Growth will come. We will grow. The market is growing. There are a lot of tailwinds. Manufacturing in India is going to have a good run over the next 5-10 years. We are confident about it. So we only have to make sure that we execute well. While we get that growth, we need to ensure that we satisfy our own, let us say, expectations of bottom line. We need to grow profitably.
Yes.
Right. So that's how we are going to look at it, Darshan.
And sir, one thing I want to understand from you that means after 600 crore or 750 crore, there will be some increasing in the borrowing also, or it will be maintained at this level?
See, obviously, we will need to pump in funds. But having said that, if we are successful in growing our bottom line, right? If our EBITDA continues to grow well, then internal cash accruals will also come in strongly, and that will help us to not over leverage or over borrow, right? So that's how we would look at it.
And then in the last means 2 years before in the Concall, you also said there are some losses in our subsidiary that will be helpful to means to get in the bottom line. Maybe after the merger it will take effect.
Yeah. So basically, we have a tax shield because of the losses that we have accrued in the climate control vertical. Post merger, we will be eligible for, I would say, a income tax shield of almost about 4 crores.
Yeah.
And we will be eligible for obviously unlocking some of our GST tax credits, which are stuck in climate control vertical. Once we merge, we'll be able to utilize those credits in the merged entity. Right?
Okay. So, after the merger take place, it will come into effect.
Yes, exactly. Post merger, there will be I would say, a cash flow benefit or spread over maybe 3 to 6 months. There will be a cash flow benefit of almost, I'm guessing somewhere in the range of 6 to 7 crores of cash flow benefit.
In the last call, you indicated up to 8 crores. Yeah, maybe.
Up to 8 crores. We've already utilized some of the tax credits, whatever.
Yeah. Then it's fine.
In terms of GST credits. Income tax, definitely there'll be a 4 crore tax shield. We had computed, I think, about 3-4 months back. The GST shield was about 4 crore unlock. We've already utilized some of because the sales that have happened over the last quarter, we've utilized, I think, 1 crore GST credits. So another 3 crore we will be able to get.
Thanks for answering my call.
Most welcome. Thank you for your interest. And I think with that, we'll close. Thank you to all the investors, shareholders who came for the call today. Thank you for interest in the company. And thanks for all your support and for expressing all your positive sentiments. We look forward to catching up again soon. Thank you.
Thank you. Thank you all.